session once again. This is advanced taxation class, and this time round we are looking at the August 2022 sitting. So be ready, have your calculator and other materials, and let's break down the numbers together. So just a few tips before we start. Number one, in a real exam situation, take your time to go through the paper. Spend the first 10 minutes or so. Go through the entire paper to do what we call question ranking. In other words, look at each and every question in details. See which questions are the easiest for you, and start with your best question and finish with your worst question. So if, for example, question 1 is testing on something you may not be very familiar with, you are free to make it your question 2 or 3 or even 5. So what you do in short, look at each question keenly, determine how many marks you are sure of from each question, then start with the question that will earn you the highest number of marks. Finish with that which will earn you the lowest number of marks. Of course, in this session, we shall look at each question in details and we shall answer all of them. Again, as you answer questions, please be very consistent. Like each question will have 2 or more parts. Like say it is question maybe 3. And question 3 has part A, part B, part C and all that. So what I mean is, do not answer part B or C, for example, before you are done with part A of the question. So be as consistent as possible. Normally, if you answer a part, a higher level part before you finish with the lower one, the assumption is the answers you're presenting are for the first part. So you are likely to fail because of that. So do your analysis keenly, be very consistent with the questions, and make sure you answer each and every part of the question keenly. Maybe we shall use this session to illustrate some of these tips so that you are able to sit the exam once and for all and be able to pass and move to the next level. So in this session, we shall look at the August 2022 paper, and maybe to illustrate what I'm talking about, we can go through the paper. You are even allowed to start with the last question if you think it is your best question. So maybe to illustrate that, I'll want us to go through the entire paper. Assuming you've done your analysis and say your question, your best question is question 5, just as an illustration. So go through question 5, be very consistent with the parts, and make sure you do each and every part keenly. So assuming that is the case, allow me start with question 5 of the paper. So question 5 has 3 parts, that is part A, B, and C. Part A and B are theory questions, then part C is a computation question. So part A says, a recent publication from a leading international advisory group opines that of all forms of tax incentives, tax holidays are the most popular among developing countries. A recent publication from a leading international advisory group opines that of all forms of tax incentives, tax holidays are the most popular among developing countries. Required, discuss 4 limitations of tax holidays in developing countries. Discuss 4 limitations of tax holidays in developing countries for 4 marks. Now, first, please understand the origin, the background of the question. The question being tested here is on tax holidays. So first of all, you should know what tax holidays are. There are possible advantages and disadvantages, which is the question here, and every other thing about that. Now, just to start us off, there are various forms of tax incentives that a government may offer to its taxpayers. Now, most common among these are tax holidays. So tax holidays are basically exemptions from taxes for given number of periods or tax periods. A good example is what you have in the case of EPZ enterprises. In Kenya, for example, EPZ enterprises enjoy tax holidays for a given number of years, that is 10 years to be particular, for the first 10 years of the operations. So yes, they operate and make income from the operations, but the government allows them not to pay taxes on such income. So then we say they enjoy tax holidays. So tax holidays, in short, are simply exemptions from taxes for a given number of periods. So the question is, discuss 4 limitations of tax holidays in developing countries. Now, when answering such a question, number 1, please have what we call an introductory statement. An introductory statement is simply a statement introducing what you want to talk about, and where you are told to explain a concept in relation to your country, then the next thing is please identify that country. For example, here we have been told to explain the limitations of tax holidays in developing countries. So in this case, it is in respect of developing countries. If they ask you to do so, maybe in relation to your country, then our country being Kenya would do so in relation to Kenya, to be particular. So then, just as an illustration, you can have this kind of introductory statement. I'll write this for purposes of illustration. So we are answering question 5, part A. So you can say, for example, the following are the limitations of tax holidays in developing countries. So that is an introductory statement. Then you can now start explaining the limitations one by one. In mathematical papers like taxation, you're allowed to number your points. So 1, you can say, for example, tax holidays reduce tax revenue to the governments of developing countries. Now, the ultimate result of tax holidays being a tax incentive is it will reduce the amount of revenue that the government will be receiving from taxpayers for a particular period. So what is the effect of that? You can go ahead and say, for example, this may force such governments to raise more revenue, more income from other sources, such as maybe public borrowing, which overburdens their taxpayers. So, say for example, the government of Kenya decides to extend tax holidays to a number of sectors in the economy. That would mean that the tax revenue the government will be collecting would be low. So to finance its activities fully, the government may have to borrow, for example, from other organizations or other governments. So what does that mean? It means the Kenyan taxpayer may be overburdened with the interest and all that on the borrowed funds. So that is one. Number 2, you can say that tax holidays are prone to abuse by investors. For example, investors may close up their businesses and enter into other operational arrangements with those enjoying the exemption enjoying the exemption. This further reduces government's revenue by encouraging tax avoidance. Now this is what I mean. Say for example, company A is enjoying tax holidays for the first 10 years of its operations. And company B, being aware of that, what they do is to enter a partnership so that, for example, company B transfers its operational activities to the company A that is enjoying the tax holidays. So what does that mean? Through that such transfer pricing activities, this company will be avoiding taxes, not evading, avoiding taxes, so that the government will be receiving less and less in terms of tax revenue. Number 3, you can say time-bound tax holidays may encourage short-term or short-run investments which may not benefit the developing countries as long-term ones or long-run ones. Now this is what I mean. Say the government of Kenya is granting tax holidays for given companies in given sectors for maybe 5 or 10 years. So what will that mean? Investors may come to Kenya, invest in Kenya for the 5 year, 10 years or so, just to enjoy the tax holidays. Then after that, they stop the operations and go elsewhere. In that case, such a short time of investment in the country will not benefit the country so much like those long run projects or long run investments which are in other countries. Number 4, you can say, for example, that tax holidays may be expensive to the governments. Tax holidays may be expensive to the governments of developing countries, especially where the investors or the taxpayers have to file their tax returns every year. Now remember, this is against nil revenue. So the government is spending so much to administer the tax holidays, but receiving nil revenue. So that may mean that the government will be losing so much because of the expensive exercises. Say, for example, this is against nil revenue from such taxpayers. So say, for example, this may be agricultural companies or EPZ enterprises enjoying tax holidays for 10 years. So the government will have to spend much to administer the tax holidays and ensure that these investors comply with the regulations. But remember, it is receiving nil revenue from such investors. So that may mean that tax holidays may become very expensive to administer in developing countries. You can go ahead and explain more and more, but in an exam situation, you may not have to explain so many points. Just explain the required number. In a revision session like this, you can have as many points as possible. Maybe you can add one that the duration of tax holidays is prone to abuse and extension by investors through creative redesignation of their investment. So this is what I mean. For example, a company A has maybe 5 investors in it or shareholders. So they are investing in Kenya for 5 years or 10 years and enjoying the tax holidays. Then what they do is that at the end of the tax holiday period, they reorganize the company or the project or the investment, start a new project, and pretend that they have abandoned or cleared with the first project just to continue enjoying the tax holidays. And you see, through such, the government keeps losing so much tax revenue, which at the end of the day will affect the government's operations. So they can be as many as possible. In an exam situation, pick your best points, explain them properly, and you don't have to explain more than required, because you may be eating into the time required or rather to be used in answering other questions. So that could answer part A of question 5. Know what a tax holiday is, advantages of tax holidays, disadvantages of tax holidays, know how the tax holidays are granted to companies, or rather which investors or which sectors of the economy enjoy tax holidays and for what period in your country. Part B of the question says, it's still a theory question. In the recent months, the Revenue Authority reports have indicated achievement of tax collection targets. In the recent months, the Revenue Authority reports have indicated achievement of tax collection targets required. Explore the factors that might have led to this achievement. Explore the factors that might have led to this achievement for 4 marks. Now, the non-achievement of tax collection targets, like say KRA in Kenya for the financial year 2022-2023, targets to raise maybe 2 trillion shillings in terms of tax revenue. Now, the achievement or the non-achievement of that will depend majorly on 2 factors. One is the level of tax evasion in the country, and 2, the level of tax avoidance in the country. So any measures to curb, rather to minimize the level of tax avoidance and tax evasion in the country would help achieve tax collection targets in any country. So here we are asked to explain any 4 factors that might have led the achievement of tax collection targets in Kenya by our Revenue Authority. Of course, our Revenue Authority in Kenya is the Kenya Revenue Authority. So again, being a theory question, one have an introductory statement. So you can say, for example, the following factors might have led to the achievement of tax collection targets by the Revenue Authority in Kenya. The following factors might have led to the achievement of tax collection targets by the Revenue Authority in Kenya in the recent months. You should also include the period. As you frame the introductory statement, be guided by the words of the question. So let me pick it again. You can say, the following factors might have led to the achievement of tax collection targets by the Revenue Authority in the recent months, something like that. Then you can explain your point. So you can say, for example, there are many factors. One is about heavy penalties on tax evaders. Heavy penalties on tax evaders. Now, this is what we mean. In the recent past in Kenya, we have seen the Kenya Revenue Authority imposing very heavy penalties on those found guilty of tax evasion. What has been the effect of this? This has discouraged tax evasion to a great extent, and so the Revenue Authority has been able to collect more, and therefore that has contributed to it achieving its tax collection targets in the recent months. Another factor could be the reactivation of what we call the KRA call center or customer care center. For example, if you are a taxpayer in Kenya, in the recent past you may have noticed that KRA call center or customer care center has been so consistent in reminding taxpayers, for example, to pay their taxes as required, to file their tax returns and all that. So that has kept, encouraging taxpayers to do what is required and comply with the tax rules and regulations. And because of that, KRA has been able to achieve its tax collection targets. Number 3 is about the the collaboration of Kenya Revenue Authority with other stakeholders like the financial institutions like banks, employers and all that. In the recent past, if you are keen, for example, you cannot open and even operate a bank account without supplying your KRA details. Why? Because KRA works together with such institutions just to ensure that all taxpayers comply with tax rules and regulations. So you go opening an account in a bank, the first thing they'll ask you is your KRA PIN. Why? So that any transaction that earns you any income from that particular bank will have to be captured by the KRA system. So that has ensured that there is total compliance by taxpayers, and therefore KRA has been able to achieve its tax collection targets. Another one could be the modernization of the tax system. Now, if you are keen, for example, in the recent past, you don't have to go and queue at KRA halls to pay your taxes or file your tax returns, or go to banks to, be bothered by the long queues at the banking halls and all that. You can file your tax returns, you can pay your taxes from the comfort of your home or your office. Just with systems like iTax and all that, you can pay your taxes as required on time without much straining. Those must be 4. Another one could be about increased taxpayers' education through programs like tax clinics. If you are keen, for example, KRA has been very keen to educate taxpayers on factors like importance of paying taxes, how to pay taxes conveniently, when to pay such taxes and all that. If you are keen in Kenya, anytime you switch on your TV, you'll always see some advert or rather some message from KRA reminding you on how to go about your tax issues and all that. So that has encouraged taxpayers so that people are able to pay their taxes as required from the comfort of their homes and offices, and that has meant achievement of the tax collection targets by KRA. So those could be some of the factors which might have led to the achievement of tax collection targets by the Revenue Authority in the recent months in Kenya. And that is question 5B. I move to question 5C, which is now mathematical. It says, John Mali has been trading as a sole proprietor for the past 4 years. The Revenue Authority suspects that the business has been involved in tax fraud since it commenced operations. John Mali has been trading as a sole proprietor for the past 4 years. The Revenue Authority suspects that the business has been involved in tax fraud since it commenced operations. The firm has submitted the following records since its operations from 1st January 2018 to 31st December 2021. So we have a list of assets, liabilities, and additional information 1 to 4. Required, determine the taxable income of John Mali for each of the 4 years ended 31st December 2018, 2019, 2020, and 2021 for 12 marks. Determine the taxable income of John Mali for each of the 4 years ended 31st December 2018, 19, 20, and 2021 for 12 marks. Now, this question is from the topic we call tax investigations in advanced taxation. Now, it is testing what we call preparation of capital statements. So that reminds you, number 1, know what a capital statement is. Number 2, know the circumstances under which capital statements are prepared. Number 3, know the steps involved in preparing capital statements to determine taxable incomes for past periods. Just a quick reminder before we do the actual question. In tax investigation, if KRA suspects that a taxpayer, for example, has been involved in tax evasion, then they have to they have to determine the actual taxable incomes of such a taxpayer for the tax period under investigation. Say, for example, KRA suspects that you've not paid the correct amount of your taxes for the past 5 years. So what they will do is to determine your actual or your true taxable incomes for each of those past 5 years, then they will advise you on the correct amount of tax you should pay. There are two ways of doing that. Number one is by reconstruction of financial statements, that is, preparing the financial statements afresh to determine your actual tax liability. Number two is preparation of what we call capital statement. Now, the first method has a limitation in that normally the taxpayer may not have adequate information to help KRA prepare reconstruct such financial statements. So that means the second method comes in handy, and that is what we call preparation of capital statements, and that is what the question is testing here, a very common exam area. So here, in short, we have to prepare a capital statement for each of the for the 4-year period to work out the taxable income. This is what we do. So we are answering question 5C. The taxpayer in question is John Mali. So we write here John Mali. We are preparing capital statement. Capital statement for the period, for the period or rather we can say for the year. In this case, the periods are in years. Let's say for the year 2018 to 2021. So we have January 2018, so we write here 1st January 2018. We have 31st December 2018, 31st December 2019, 31st December 2020, and 31st December 2021. You must show the currency that you are using. Good. So we shall also use this question to help us learn the steps involved in preparing capital statement. So when we get the assets of the taxpayer for each of the periods. So be very keen. Again, in preparing capital statements, we use both business and private items. That is both business and private assets and liabilities. The assumption is the taxpayer has mixed up issues and it is not possible to separate his personal assets or items from business items. So because of that reason, we put everything together. So when we have business premises, that is an asset, business premises, 2018 January, 144 million, 160, 172, 152, and 160 million. 2, we have plant and machinery. Plant and machinery are assets, 68 million, 72, 87, 82, and 92. Next, we have motor vehicles, still an asset, 22 million, 24 million, 24 again, 26 and 24. Next we have inventory, still an asset, 9 million, 11,200, 16,200, 22 million, and 14,800. Trade receivables are assets, 7690, 8630, 8600, 7800, and 82. Next we have private residence is an asset. Private residence is asset 1. We have 16,400, 32,400, 32,400 again through. Trade payables are liabilities, bank loan liability, loan from a friend liability, mortgage loan liability. Then you have cash. Cash is an asset. 7,400, 96, 78, 8260, and 8840. That is all in terms of assets. So what we do is to get total assets. For illustration purposes, we can mark it A. In exam, you may not have to mark it because you'll be sure of what you are doing. Here, I'm marking it because I want us to understand each step at a time. So we get the sum of each column. I'm here, 2018 January, we have 144 plus 68,000, 22,000, 9,000, 7690, 16,400, and 7,400. I'm getting 274, 490. You can do it with me so that you confirm. Yes, 274, 490. 2018 December, 160,000, 72, 24, 11,200, 8630, 32,400, and 9,600. I'm getting 317, 830. 2019, 172, 87, 24, 16,200, 8,600, 32,400, and 7,800. I'm getting 348,000. 2020, 152, 82, 26, 22, 7,800, 32,400, and 8260. I get 330, 460. Lastly, 2021, 160, 92, 24, 14, 800, 8,200, 32,400, and 8840. I get 340, 240. That is step 1. Step 2 is to get liabilities. So we write here liabilities. So we list all the liabilities, again, both private and business. So one, we have trade payables. Trade payables. 2018 January, we have 14,900. Next is 19,200, 2,400, 2,400, 18,100, and 15,200. Next we have bank loan, 22,400, 21,800, 19,400, 7,900, and 18,900. 900. Next we have loan from a friend. Loan from friend. A loan is a liability. 1580, 1320, 1180, 1690, and 1020. We have mortgage loan, still a liability. This is 7800. It's 7800 all through. Yes, and if you are keen, that is the last liability we have. So the next thing we do is to get total liabilities for each case. Total liabilities. We can mark it B for illustration purposes. So we move together. Here, 2018 January, we have 14,900, 22,400, 1580, and 7,800. I'm getting 46,680. Next, 19,200, 21,800, 1320, and 7,800. I get 50,120. 50,120. Next, 20,400, 19,400, 1180, and 7,800. I get 48,780. Next, 18,100, 7,900, 1690, and 7,800. I get 35,490. And lastly, 15,200, 18,900, 1020, and 7,800. 42,920. 42,920. 42,920. The next step now is to get capital or net worth. So we do it like this. We say net worth. Now here we are applying what we call accounting equation. Accounting equation is total assets A equals to total capital plus total liabilities. So we say A equals to C plus L. That is total assets equal total capital plus total liabilities. So if you are keen, we have total assets, we have total liabilities. So the difference between the two will give us the capital of the firm, or what we call net worth. So net worth is simply here A minus B. That is why I was marking them like that. We move 2018 January 274,490 minus 46,680. I get 227,810. 317,830 minus 50,120. I get 267,710. Next, I have 348,000 minus 48,780. I get 299,220. Next, 330,460 less 35,490. I get 294,970. And lastly, 340,240 less 42,920. 297,320. The next step now is to get what we call change in net worth. I'm moving here. Change in net worth. So just to continue, we have January 2018, December 2018, December 2019, December 2020, and December 2021. So we get what we call change in net worth. Change in net worth, that is change in capital. Now capital can change as a result of four factors. One is profits or income, 2 losses, 3 additional investment, and 4 withdrawal. So what we do is simple. Like we have 2018 here, December and January. So what we do is this. We compare the capital of the firm as at 2018 December with that capital as at 2018 January. The difference between those two figures will give us, will tell us what happened during this particular year. So we start with 2018. So here will be dash. So for 2018 we shall have 267,710 less 227,810. I'm getting a difference of 39,900. 39,900, yes. 39,900. 2019, sorry, will be 299 to 20 less 267,710. I get 31,510. 2020 will be 294,970 minus 299 to 20. I get negative 4250. 4250, but negative. And lastly, we have 297,320 less 294,970. I get 2350 positive. Good. So in short, it means for each of the years, these were the profits made, except for 2020 when there was a loss of 4250. The next step now is to adjust the profits made during the year. So that is where we shall use the additional information. So we move to adjustment. So we say, first we can say add back. We add back whatever should be added back. Then we shall deduct whatever should be added, deducted. So move to information information 3. Information 3 says his personal expenses for each of the 4 years were as follows. His personal expenses for each of the 4 years were as follows. Now personal expenses are not allowable expenses for business purposes. So the assumption here is this taxpayer used business money to meet his personal expenses, and because such are disallowable expenses, we shall have to add them back so that we determine the correct profit for each of the years. So we write here, add back 1, personal expenses. For 2018 is 162,400. Remember we are carrying 3 zeros here, so this will be 162.4. 2019, 296,000. 2020, 178, and 2021, 340. Another item to be added back. Now, information 4 says we ignore capital allowances. Now, we know capital allowances are deductible instead of depreciation. If you look at these assets, we have plant and machinery, for example, here. Plant and machinery is prone to depreciation. So, instead of depreciation, we should have deducted capital allowances. But information 4 says we ignore capital allowances. We have information 2, which says interest on mortgage was at a rate of 15% per annum on reducing balance basis. The maximum mortgage interest allowed is 300,000 shillings per annum. Interest on mortgage was at the rate of 15% per annum on reducing balance basis. The maximum mortgage interest allowed is 300,000 shillings per annum. Now, there's a liability here called mortgage loan, which is 7.8 million shillings all through. And you are told in note 2, the interest on this loan was at 15% per annum, though the maximum interest on mortgage allowed per annum is 300,000. So what we do is simple. It can only be an allowable expense if the mortgage was for business purposes. So for us to adjust these incomes with this interest, we have to make an assumption. So that means we write notes and assumptions. So write notes and assumptions. One, we say the mortgage loan is assumed to have been for business purposes, hence the mortgage loan interest is allowable. Again, you can write the mortgage loan is assumed to have been for business purposes, hence the mortgage loan interest is allowable. And we are told it is at the rate of 15%, so we do 15% of 7.8 million, which is 1,170,000. But note 2 says we only allow a maximum of 300,000. So here we come and say less 1 mortgage loan interest. So we cap it at 300,000. So we say 300,000, 300,000, 300, and 300. Information 1. During the year ended 31st December 2021, a motor vehicle was disposed of for 2.6 million. The cost was 2 million shillings. What does that mean? It simply means the firm made a profit from disposal of this motor vehicle. So what was the profit? We have the disposal of this sales proceeds of 2.6 million and cost of 2 million, meaning the gain was 600,000. So we write here, gain on motor vehicle disposal or sale, and it was for 2021. So we write here 600. And lastly, we have information. We have this item called loan from a friend. Now, loan from a friend is not a business item. Again, it is not a taxable income. So because of that, we deduct it to this point. So we write here, loan from a friend. 1580. Loan from a friend is 1580 in 2018 January, but 1320 here. If you are keen, I'm ignoring January 2018 because we are not using it anymore. 2019 1180, 2020 1690, and 2021 is 1020. And with that, we now get what we call taxable income for each of the years. So taxable income. So taxable income is simply the change in net worth, then we add and deduct the adjustments for each case. So we do it for each year. So let me start with 2018. That is 39,900 plus 162.4 less 300 less 1320. I get 38,442.4 positive. 2019, I have 31,510 less 300 less 1180. I get 30,030. 30,030. 2020, we have negative 4250, we less 300, less 1690. I get 6240 negative. And lastly, we have 2350 plus 600 less 300 less 1020. I get 1630 positive. And what was the question? The question was determine the taxable income of John Malley for each of the 4 years ended 31st December 2018, 19, 20, and 21. And that is what we have done. A question could also be asked, this question could also be asked differently. They could ask you to determine the cumulative taxable income of John Malley for the 4-year period. In that case, once you reach here, simply get the sum of each of the sum of all these figures. And with that, we have answered part C of question 5, and that is the end of question 5. Take your time once again, go through it, and do more questions touching on these areas of capital statements and even the theory parts that we've covered.
Dear Lana, my name is Dr. Evan Sagwa. I welcome you to this topic of today, employee placement. This topic will take us through the meaning of employee placement, the benefits of employee placement, and the effects of improper placement of employees in a work environment. We will start with the meaning of employee placement. Meaning of employee placement. Employee placement is the process of placing or fixing an employee in one of the several positions that an employee can be able to be deployed to in any given organization. For instance, an employee may be employed as a human resource assistant. This employee can fit as a human resource assistant in charge of human resource registry, or can be in charge of human resource welfare, or can be in charge of human resource discipline section. So the process of employee placement chooses for this specific employee which of these available positions is the most suitable for this specific employee. We will look at the various benefits of employee placement in a given work environment. So one, employee placement helps in enhancing the job satisfaction level, of an employee. As a result of this placement, an employee who is put in a job where their skills match the requirements of that particular job, that employee is able to work with the minimum or no supervision. This employee is able to enjoy doing the work and working with others. Hence, the conclusion that once you place an employee in a job where their skills are relevant, this enhances their job satisfaction levels. Then two, employee placement assists in ensuring that employees are able to be more productive in their work assignments, in the sense that an employee who is placed in a job that they are able to do effectively, they are able to work, and within a short turnaround of time, they are able to give the results that are required with the minimum arrangements in relation to consultations. This also helps in reducing conflicts in the work environment. Employees who work in positions that they are able to work without supervision and without having to consult others are able to produce results for which their supervisors and colleagues are able to appreciate without having to complain and conflict in terms of the expectations. Hence, the idea that when an employee is placed in a job that they enjoy to do and they have the skills, they reduce conflicts that may come or arise between themselves, their co-workers and other employees, as it were. Fourthly, occupational accidents. Occupational accidents are minimized in the work environment in the sense that employees who are placed in jobs that they are able to do effectively in line with their skills are able to perform these jobs with minimum or no occupational accidents in the sense that they understand the job that they are expected to do. Hence, the benefit that will accrue to this particular organization or employee in the sense that occupational accidents are minimized or eliminated altogether. Then, fifthly, employees are able to achieve the targets that are set for those particular jobs. So once an employee has been placed, for instance, as a human resource assistant in charge of welfare, and they are able to ensure that employees who are supposed to access welfare services like housing, medical checkup, medical treatment for themselves and their families are able to achieve the targets. And once they achieve the targets, then the working environment will basically enjoy a better image from the users, both from internal and external service providers or external customers that they serve within that particular organization. Now, when it comes to the effects of improper placement, effects of improper placement. Before we look at the effects of improper placement, then we want to ask ourselves, what is improper placement? Improper placement is a scenario where an employee has been put in a job or has been assigned duties, and these duties are not in line with what the employee knows, the experiences of the employee, as the case might be. So in this case, some of the effects that may be associated with the proper emplacement of employees may include, but are not limited to, the following. So one, employees may suffer lower job satisfaction levels. So what this implies is that an employee who is put in a job where they are not satisfied, their job satisfaction and esteem will be low. This will ultimately also affect their performance, and once the job satisfaction of an employee is low, this may lead to other challenges like stress-related challenges within the working environment. Hence, that becomes a negative effect of improper placement for employees. Secondly, there might be a high rate of labor turnover. What this implies is that employees who are put in jobs that they do not enjoy are likely to experience negative aspects within the work environment, which may lead to employees resigning or being sacked from their jobs for absenteeism or poor quality work, and this may lead to incidences of high labor turnover among employees that may be associated with improper placement within the working environment. The third effect of improper employee placement might be an increase in work-related conflicts. Employees who are not able to work effectively will conflict with their superiors, will conflict with their co-workers, and with an increase in work-related conflicts, these employees are likely What this implies is that an increase in work-related accidents will occur in the sense that workers have been given work that they are supposed to be doing. Now, the conflicts that may arise from the accidents that may happen in the work environment, or the superiors and co-workers may not be sufficiently happy with the employee. Hence, the idea that when an employee has been put in an environment that does not align well with what they possess in terms of skills, in terms of knowledge, that will create adverse effects of improper placement within the working environment. Then fourthly, poor quality of work. Employees are expected to provide high levels of quality of work in terms of what they produce, in terms of they provide as services to their stakeholders. In the event that an employee has been placed in a job and this placement has been improper, then it is expected that to some extent the quality of work that will be coming from such an employee may not be as per the expected standards. Hence, that becomes an adverse effect of improper placement of employees within a working environment. There might also be a scenario where, at the fifth point, harsh working environment may be created as a result of improper placement. If you have several employees who have been put in positions or jobs that they do not enjoy doing, then what this happens then is that there will be hostility among the workers themselves. There will be harsher reactions from customers, both internal and external, and that creates a harsh working environment that may be occasioned by improper placement within a working environment. Then as a result of this, now we have seen benefits of employee placement, proper employee placement. We have seen effects of improper placement of employees. What is supposed to be done by management? Management is supposed to ensure that whenever employees have been put in jobs, they should be placed properly and adequately given instructions to ensure that when these employees work within the work environment, they are able to enjoy their work, they are able to work well with the others, they are able to work well with the supervisors, they are able to avoid occupational risks and hazards and accidents that occur and are inherent in the work environment, and they are able to produce proper quality of workmanship in terms of what they produce to ensure that the organization can be able to produce services and goods that can help that particular organization compete effectively in the markets within which it operates and sustains a competitive advantage through the services provided by workers who are the most important resource and asset that any organization can have. And by so doing, employee placement enjoys a very critical role, a very critical place in the process of using employees adequately, process of using employees effectively, and creating a harmonious working environment for the good of the individual and also the good of the organization to achieve both individual and organizational goals. So thank you very much for listening to this human resource management topic, employee placement. Thank you very much. I hope to see you in the next lesson.
3, 2, 1, action.
Dear learner, the next thing we want to look at is employee induction. We want to look at employee induction. Employee induction. One may want to find out what is employee induction. Employee induction may also be referred to as employee orientation. May be referred to as employee orientation. The process of employee induction or employee orientation is the process of introducing a newly hired employee or an employee who has been assigned a different job or different duties, an opportunity to go through a culturalization process which takes that worker through the processes, through the areas the workers will be working through, and introducing that worker to the colleagues with whom the workers will be working. What is the purpose of employee induction? Purpose of employee induction. Employee induction may be done for various purposes. The first purpose is to introduce the worker or employee to the work environment. This implies that the worker who has been hired and assigned duties is introduced to the immediate work environment within which that worker will be performing his or her duties in that particular organization. Employee induction also helps in reducing the anxiety that a given employee may have as they take up new roles. This helps in ensuring that the workers' worries are handled, the workers' anxiousness is also taken care of by the employee being informed that they can be able to tackle this work and also interacting with the people that the worker will be working with. The purpose of employee induction is also to expose the worker to organizational rules, rules and regulations that will be governing the employee as they work within the work environment, and also to provide a realistic view of the job to the worker. What this means is that an employee may be having a different view or orientation regarding a given job or a given task they are supposed to be handling. So through this process of employee induction, the worker is able to have a bird's eye view or a realistic view of the job, and this one enhances the chances of the employee settling very quickly within that particular role. Now we want to look at the areas through which an employee may be inducted, areas of employee induction, Depending on the needs of any given one organization, the areas of employee induction may include: one, the history of the organization. This is where the employee is introduced to the history and background that the organization has gone through, so that the employee can be able to understand where has the organization come from, what has the organization been doing, where is the organization at as it is as the employee is joining, and where is the organization going. The second aspect would be the organizational structure. An employee being taken through an employee induction program may also be oriented through the structure of the organization, showing the various levels or hierarchies within that particular organization in relation to who is the one in charge of that organization as a CEO, who are the deputies, who are the section heads, who are the people managing different departments, different units, so that the employee can have a structure of how work is performed in that particular organization based on this organizational structure. The employee may also be inducted through the names of the key human resources or executives within that particular organization their duties and responsibilities in terms of those who are driving that particular organization, so that the worker is able to know when it comes to the organization, who are the decision makers, what are their responsibilities, what are their duties, what do they do, and how will the employee support these particular processes. The employee may also be taken through other organizational aspects like the strategic plan and strategies that the organization has in relations to its operations, so that the employee can know how to support these particular strategies, what role the employee will play, what contribution the worker will give, and also the context within which work is being done in that particular organization. The employee may also be oriented through welfare services that are available to staff, These may include directly the staff as an employee, medical facilities that are provided for workers and their families, and when an employee needs counseling, for example, what services are made available, among other issues, sporting facilities, and so on. Employees may also be oriented through the staff handbook that contains rules and regulations that govern the employment contract of that particular employee and other employees within that particular setting. This helps the employee so that the employee can now know in cases, for example, of annual leave, where does the employee take the annual leave form? Where does the employee get support in relation to workplace operations, as the case might be? The employee may also be oriented through the occupational health and safety procedures that are adopted within that work environment. These occupational health and safety procedures, as they may be provided for in the various statutes, for example, the Occupational Health and Safety Act or other regulations, may assist in ensuring that the employee is able to work in an environment where there is reduced risk to occupational hazards and risks, and the employee can also be able to undertake protective measures, protective clothing, protective equipment to ensure that risks and accidents are minimized, as the case might be. It should also be noted that the employee can also be oriented through number 8, the products and services that the organization provides, the products and the services that the organization provides, These helps in ensuring that the employee has product and service knowledge, so that when the employee is serving internal and external customers, the employee can be able to resonate well with the requirements of these stakeholders, so that they can be provided the services and facilities as the case might require. Then number 9, there could be quality standards that the organization might require the employee to be exposed to. For instance, the ISO certification standards within which the operations of the organizations take place. So the worker is taken through these particular processes to ensure that they comply with the standard operating manuals, the standard operating procedures to be within the requirements of this particular organizational operational context. Then finally, the employee may be oriented through the layout and setup of the organization, which helps the employee to be able to move around the organization, to be able to do things without having to consult others, because they have a picture, they have a map, they have a setup of how the organization operates, and when they start working, they can be able to at least work well with the other colleagues, the other sections, the other departments within which they are supposed to get their work done. So dear listener, we may want to ask ourselves, what are some of the benefits that may be associated with employee induction within a given organization? So in this case, we can mention some benefits of employee induction. Benefits of employee induction. Benefits of employee induction. Employee induction. The first benefit that may be associated with employee induction or orientation is that an employee is able to settle faster settling in a new job. Once the orientation takes place, an employee is able to settle faster within a new role, within a new job, because they know what they are supposed to do in relation to their duties, in relation to their responsibilities. They are also able to move around without having to consult others. The second benefit that may be associated with employee induction is that it makes the employee to have an affinity for the organization. What this means is that an employee who has been taken through an orientation program has been exposed to the colleagues the employee will be working with. The employee is able to be attached to that particular organization because the welcoming process, the orientation process is able to welcome that particular employee to a work environment, and what follows is a scenario where the employee would want to work for that particular organization and make their contribution. Proper employee induction also helps in reducing the rate of labor turnover. What this implies is that an employee who has been taken through an orientation process is likely to accept the working environment and the working conditions because the employee has been exposed to those particular conditions. So when challenges come, this particular employee is able to take those challenges within their strides, and this helps in reducing labor turnover with specific emphasis to new entrants to particular positions and to particular jobs. Fourthly, reduction of consultation times. Reduction of consultation time. What this point implies is that an employee who has been taken through an effective and proper orientation or induction program has learned what is expected to be done, has known the reporting structures, and this particular employee is able to work with the minimum or no consultations, and this reduction of consultation ensures that activities can be done when they are supposed to be done without having to spend time on consultation. Then 5, once an employee has been inducted, it helps in reducing dependence on other workers. Now, what this implies is that an employee who has been oriented, for instance, through the layout, has been taken through the layout of any one given organization, is able to move within that particular organization freely without having to depend on other employees to ask for directions. If, for example, a meeting is supposed to be done in Block A, the worker will be able to know where Block A is and is able to move, is able to get work done, is able to deliver what is supposed to be delivered at the shortest time possible. Then costs that are associated with labor turnover are also reduced. So we can also say in our sixth point, it may help in reducing costs that relate to new hire. So when employees who have been hired are able to remain in particular positions or in particular jobs, they are able to work and there is no need to spend money on re-advertisement of positions or to hire others to be able to do the work of those who have left the organization. And by essence, this reduction in costs adds value to the organizational operational environments. So these could be some of the benefits that are associated with employee induction within a given organization. The question one may want to ask is, are there some challenges that may be associated with the employee induction process? There could be some challenges of employee induction. So one, lack of time among senior employees like supervisors. The process of employee induction may require that supervisory staff or administrative staff should be able to find time to be able to take new employees through an induction or orientation program. So lack of time may be one of the challenges that may be experienced when you want to conduct an employee induction program in any given organization. Secondly, employees may be provided with a lot of information, and this may lead to information overload during the orientation process, where the employees may, for instance, be required to be taken through a whole process of induction, maybe in 1 or 2 days. So this information overload may also be a challenge that might not be handled effectively with the new employees who have been hired to a given job because of information overload. The other challenge that may be encountered is the lack of knowledge about organizational operations by some of the employees who are expected to provide the employee induction program. So in cases where those who are supposed to provide employee induction may not have the requisite knowledge, the requisite skills to be able to provide the orientation effectively, then this becomes a challenge to the process of employee orientation or employee induction. Fourthly, employees who have been inducted may be thrust or thrown into the actual work after orientation. And this may not work well for the newly hired employees in the sense that once they go through an orientation program, they may not have the requisite exposure to be able to carry out what it is required within that working environment. Hence, that becomes a challenge of employee induction. Number 5, lack of documents and manuals to conduct in the employee induction. What this means is that an organization is expected to have manuals that are supposed to be used to conduct the employee orientation program, but due to changes that take place within the working environment, it becomes difficult for an organization to compile manuals that are relevant at any one given particular time to be used in the process of employee induction. Hence, this becomes a challenge in the process of employee induction in an organization. So, dear learner, we have looked at the process of employee induction in this particular section of our lesson, and we have seen that employee induction is the process of orienting or culturalizing an employee or socializing an employee to be able to acclimatize to a working environment, to be able to take up the roles that have been assigned at the shortest time possible. This process has areas that employees are supposed to be taken through, and these areas are supposed to be mapped out clearly. There would be benefits through the induction program where employees can settle down very quickly within their roles in terms of the process. They can also be able to have some affinity and affection to the organization, towards the organization. But on the other hand, there are also some challenges that may be encountered in the employee induction process, which may include aspects like lack of time, lack of documents to be able to carry out the process, and also lack of knowledge among some of the employees who are supposed to carry out that particular process. Organizations are supposed to take measures to ensure that the employee induction process is conducted by senior management who can give this the administrative push and support that is required to ensure that newly deployed workers are able to settle within this particular process. They are able to take their tasks seriously and be able to contribute to the work environment and be able to provide their contribution to realization of both individual and organizational goals. So thank you very much for your attention.
Hello everyone, my name is Mr. J.M. Kimani, your lecturer in management accounting. I welcome you to the revision exercise of November 2018. We are starting with question 1. Question 1 of November 2018 reads that Part A budgetary control system could prove successful only when certain conditions and essentials exist. With reference to the above statement, highlight 6 conditions and essentials for an effective budgetary system. End of question. Now, when talk of a budget, the conditions and the essentials of that good budget, you should consider the following. The first one, you should consider defining the goals or the objectives and even the rewards or the price to these goals. So we can have define